How's it going, traders, investors? In this video, we're going to be looking at the top 10 stocks that are currently undervalued. Some of them undervalued, and some of them are great stocks that have low debt, even though they don't pay a lot of high dividends. But these are the stocks that are safe, and they're not going to be able to cut their dividends because they have very solid balance sheet, and they're actually rated as very good by Bank of America. So these are the top 10 stocks that are rated solid for the recession and also safe for dividend payment for the next, for upcoming months and even years, because they have very solid balance sheets. So in this video, I'm going to be going over looking at exactly how these stocks actually perform, what are the current prices, and what are the current dividend yields for these top 10 companies that we're going to be looking at, guys. So make sure you stay tuned. Now let's get into the video. The first stock we're going to be looking at is going to be Emerson Electric Incorporated, EMR, ticker symbol EMR. And as you can see over here, from year to date, it actually hit a low of $38.08. It's currently trading at $50. So this company has a dividend yield of 4.22%, and the earnings date is actually coming up in a few days. And the 1-year price target for this company is $59. So it's currently kind of trading, and it's kind of undervalued if you want to get involved with this company. So this is one of the companies that was rated very solid. It doesn't have a lot of debt, and based on 30 years performance, if you can see the balance sheet, if you have time to actually look at the balance sheet, this company has been paying and increasing dividends for the past 30 years. So this is one of the companies that they looked for. So now let's look at the second stock. Now the second stock I'm going to be looking at is going to be SWK, or Stanley Black & Decker Incorporated, ticker symbol SWK. Now in this stock, let's look at the year to date. It hit a low of around $72.03, and it's currently trading at $112.54. And the 1-year price target is $141.50. As you can see over here, it's kind of undervalued, and it's kind of trading way below the 1-year estimate, and it's kind of in a fair price range. As you can see over here, the 52-week range for the stock is between $70 and $173.67%, and the dividend yield is going to be 2.59%. Now all of these stocks are actually solid companies that, compared to other companies, might not have a lot of higher yields, but they're very stable, and they're not going to cut their dividends. So that is one of the important things you want to see, because you see a lot of companies cutting their dividends. The earnings is coming up April 30, and this company is super solid. So now let's move on to the third stock. Third stock that we're going to be looking at is going to be KMB, or Kimberly Clark Corporation, ticker symbol KMB. So as you can see, we're looking at the 1-year trade, the 1-year chart for this company. It's kind of super volatile, and it's kind of actually really close to the 1-year price target for this company. As you can see, the 52-week range is between $110 to $149.23, and the dividend yield is going to be 3.6%. So this is a very solid company. As you can see, it actually got bought back up all of the dips that it actually sold off, and it's basically trading at the highs of the stock market when it was trading around this area for the beginning of the year, which is around $143.38. So it's really close by. So this is, compared to, it's not undervalued, but it's kind of really solid company. As you can see, that's why it's really gotten, bought back up to the level that it was at right now. So if it actually can get like a little bit of a sell-off, if we have, based on, the economic data that's we're looking forward, we're actually going to be in a recession. So the market can actually take a lot of selling opportunities. It can sell off a lot. So this is one of the companies that we can take an opportunity to kind of buy when it comes to investing and finding good deals. So this is one of the companies that you need to keep an eye on, for a buying in opportunity. So now let's move on to the fourth stock. Now the fourth stock we're going to be looking at is going to be Exxon Mobil. So the oil sector has been getting crushed a lot. So so it's not only just not only it's going to be the CV outbreak that affected it, but it's just by the sector itself has been downperforming for the past few years. And as you can see over here, it's kind of trading around between $30 52-week low to $83.49. Compared to other companies, this is other energy companies, the dividend yield it's relatively consistent, and they actually announced that they're not going to be cutting their dividends when it comes to the people or the shareholders of this company. So the forward dividend yield is going to be 8.9%, and we're going to see what's going to happen, and definitely on earnings, because these companies has been definitely being beaten down, for a while, so let's see. Even though, if the economy starts to recover and the price of oil starts to go up, definitely the stock can go back up, because it's really, really solid company in the whole energy sector. This is one of the stocks that is really, really solid from the entire energy sector if you're looking at the balance sheets and things like that. So that's why it's included in this top 10 pick by Bank of America. Now let's move on to our fifth stock. So the fifth stock that we're going to be looking at is going to be McDonald's. So McDonald's is kind of considered as a recession-proof stock, because a lot of people are still going to be going to McDonald's because it's relatively cheaper and it's really, really solid. So as you can see over here, the forward dividend yield is going to be 2.79%. Let's look at the 1 year to date chart, and it kind of dipped a lot due to the outbreak, and it had a low of basically a 52-week low of $124.23, and the high that it made for 1 year for 52 weeks is going to be $221.93. It's currently trading at $186.10. So this is definitely undervalued, and its dividend yield pays dividend consistently for the past 30 years, and they're increasingly have solid earnings. And that is one of the companies that you guys need to look for. If we have a good opportunity if it dips even more, it's a great opportunity to add, even if you buy it right now. And this opportunity, and this great solid opportunity, is really, really solid. Now let's move on to the sixth stock. Now the sixth stock is going to be Walmart. So Walmart has been really, really solid, because this is one of the only retail stores that is actually at its all-time highs and broke out. So it's really, really solid right now. But however, if we actually experience any kind of sell-offs or kind of dips within the next few, next few months, I don't think for Walmart we might see a dip or anything like that. But after earnings, we'll see what's going to happen. But it's been performing really, really well. As you can see over here, the 52-week high is between $98.85 and $132.97. So it's definitely, at the 52-week highs, but it's definitely solid, good company if there's a good dip. So it's definitely above the 1 year price target. Over here is $129.26. It's currently trading at $132. So it's a stock that you need to keep watching for a great opportunity if it gets sold off. So it's definitely overvalued, but if we see kind of a dip, as you can see over here, even though the CV outbreak kind of happened, Walmart did not sell off that much, because it's really, really solid. So any kind of opportunities to get involved in the stock, and for any kind of dip, that's really solid. So after the earnings, we'll see what's going to happen in the next few months. But Walmart is definitely one of the companies that was included on Bank of America's list. So now let's move on to the seventh stock. So the seventh stock is going to be also another retail, is going to be TGT. So it's going to be Target. So this company, let's look at the year-to-date charges, because from this company is going to be, it kind of dipped a little bit. The 52-week low that it made is around $70.03. And the 1 year price target is going to be $124.39. So this is kind of approaching it right now, the 1 year price target, and it's kind of overvalued, but the earnings is also coming up within the next, the next months. So we'll see what's going to happen. But the dividend for this company is going to be 2.42%, even though it's not that much. But this is a company that has solid earnings, that usually have solid, earnings. And sometimes they might not have solid earnings, but they have good balance sheets, and they don't have a lot of debt, which is important when you look at it in this kind of market environment, where you can see a lot of companies having to deal with their debt and having to borrow, max out their their loans with banks and things like that. So this company is actually solid compared to other companies. So this is one of the company that you need to be looking an eye on. The dip, it's kind of in the middle between the $70 and $130, even though it's kind of closer to the 52-week high price point. So it's kind of a good opportunity to kind of wait for the dip, because it's kind of, the whole market is kind of extended right now. So maybe getting involved at this price point might not be a good point to get involved in. So this is going to be the eighth stock that we're going to be looking at. So it's going to be the seventh stock. So let's move on to the eighth stock. So the eighth stock that we're going to be looking at is going to be PEP. So this is Pepsi, so ticker symbol PEP. Now this stock's been performing really, really very well. As you can see over here, it kind of sold off a lot within the CV outbreak. So it hit a low of the 52-week low that it made is $101.42, and the high of, for the 50 weeks is $147.20. The forward dividend yield is 2.82%, and earnings is coming up in April 28th. So that is really, really important date to see exactly how they're going to cope up with, how they're going to be coping up with the pandemic that we're experiencing right now, the economic contraction that's happening around the world. So it's really important to kind of wait for that before you get involved in this company. But as you can see over here, it kind of recovered all of, all of the sell-off that it kind of experienced for the past few weeks, and it's kind of basically up and trading just like before all of this kind of pandemic thing happened. So maybe kind of wait for an opportunity to kind of dip, but as you can see over here, this is also very, very solid company to keep an eye on and to get involved in it. Now let's move on to the ninth stock. So the ninth stock, sorry about that. So the ninth stock that we're going to be looking at is going to be Coca-Cola. So basically Pepsi, Coca-Cola. Coca-Cola it's also been performing very, very, very well. It's been solid, and it's kind of not relatively compared to the Pepsi. As you can see over here, the price is not even that high, but as you can see over here, the 52-week low that it made was like $36.27. Right over here, the lows that it made from, the CV outbreak sell-off, and the highs was $60.13. So it's kind of like in the middle, but it's kind of like getting closer to the 52-week highs. The 1-year price target is $53, so it's really approaching the 1-year price target. Staying over here is kind of overvalued, but the forward dividend yield going to be 3.48%, and earnings is coming up in April 21st. So it's really all of these companies. It's really important to kind of see exactly how they're going to be dealing with all this pandemic that has been happening around the world, and how they're going to be dealing with all of this contractions of the economic impact that within these companies. But these companies can definitely handle any kind of contraction within the economy, even though they have really, really good products that they sell that people kind of need and things like that. Also they have very solid balance sheet, and they don't have a lot of debt, and they have consistent been improving their earnings, so from time to time. So that is one of the important things that you need to look for if you want to get involved in a company, especially during these times when there is a lot of issues going on around the world. So the last stock that we're going to be looking at is going to be the 10th stock. Is going to be ticker symbol DOB, and that is going to be Dover Corporation. So this company is currently trading at $88.49, and the forward dividend yield is going to be 2.33%. So during the pandemic sell-off, the low that it made is around $62.95, and the high that it made is $120.26. So as you can see over here, it's kind of bouncing back a little bit. The 1-year price target is going to be $101.18. So this is definitely kind of undervalued over here. If we can kind of recover, or if we can kind of see any kind of positive things, that is going to be the price target that you want to look for. Basically the price points right over here to get back into the hundreds and to be trading in 3 digits. So basically that is one of the things that you need to look out for this company. And the earnings is coming up also in a few days, so let's see exactly what they're going to be saying about exactly how they're going to be dealing with the current economic issues that's happening around the world. But these basically are the top 10 stocks that were kind of released by Bank of America, looking at their earnings, their debts, their balance sheet, to figure out exactly what are these companies that actually have solid earnings. They have solid earnings, they report solid earnings, they don't have a lot of debt, they can be able to pay their dividends without any kind of issues, because a lot of companies have been cutting their dividends a lot. But these are not a lot of, they don't yield a lot of dividends, but they are consistent, and they have very solid sheets for compared to other companies. So these are the top 10 guys. So hope you enjoyed this video, guys. If you are new to the channel, make sure you subscribe. If you have any questions, drop in the comment section below, and I will catch you on the next video, guys. So thank you, and have a great day.